Mentioned that the South African economy contracted by 7% in the year 2020 compared to 2019. In the fourth quarter itself, economic growth grew at a rate of 1.5% on an annualized basis. That is compared to the fourth quarter of 2019. It rose by 6.3%. For more on the latest GDP numbers, I'm joined by Dr Azar Jammine. He's the chief economist at Econometrix. Thank you very much, Dr Jammine, for joining us. Now, of course, in a way, it was highly anticipated that we were going to see a major contraction, but it's a little bit better than what the authorities, the likes of the central bank and even National Treasury had anticipated, but still a very bad reading, but reflective of the pandemic.
Yes, it was a slightly better reading than I think most people had anticipated, and reflects a continued recovery in the economy in the fourth quarter, resulting from the progressive lifting of lockdown restrictions. But yes, for the year as a whole, minus 7% is probably the worst such number on record. But you've got to bear in mind that in the second quarter, the economy was down 17.5% on the second quarter of 2019. So we have seen a progressive improvement on a year-on-year basis from minus 17.5 to minus 6.1 to now to minus 4%.
Yes.
So fourth quarter was down just over 4% compared with the fourth quarter of 2019.
Now, Dr. Jammine, in terms of when we look below the figure, the fourth quarter figure, we see, for example, that manufacturing did particularly well. It was up over 21%. Was there any particular reason for that, or is that influenced by momentum from a weaker manufacturing sector in the previous quarters? What's driving that?
It's a combination. Yes, it is partly a reflection of coming off a very low base. Essentially, inventory levels in the economy were run down to next to nothing, and so there had to be a build-up of momentum in manufacturing to accommodate the demand that was gradually picking up. The second aspect is that the global economy picked up a lot of momentum in the fourth quarter, especially after early November, when there was an announcement by Pfizer that it had developed a vaccine to combat the COVID-19 crisis. And as a consequence, you saw a big ramp up of activity internationally, and that fed through into encouraging an improvement in manufacturing goods from South Africa, especially to Asia, I would have thought. We've seen a fairly strong performance of exports in recent months.
Now, the GDP figure not only just looks at growth, but it looks at how we're also spending in the economy. Interesting to see that the individuals, that is the household, is spending quite nicely, not as much as in the third quarter, but that's still maintaining quite nicely. But government only spending at a rate of 1.1%.
Yes, well, that was to be expected, because the government has been trying to actually curtail its expenditure because it cannot afford to carry on spending given the sharp decline in tax revenues that has been experienced. The consumer, on the other hand, continued benefiting from the 3% reduction in interest rates over the course of last year, which amounts to a 30% reduction in interest payments for the average consumer. You know, the overdraft rate fell from 10% to 7%. So that makes a big difference, and consumers were able to carry on spending. Besides the fact that with the gradual lifting of restrictions, more people did come into the job market again and were happy to start spending a little more, especially in the hospitality and restaurants and leisure industries.
Yes. Now, another area, it's a bit of a fancy term, the gross, basically the gross fixed capital investment, which speaks to, companies and businesses investing in the economy. That grew at a rate of about 12%, but much lower than the previous number in Q3 of 26% or whatever it was. That's a number that you've been concerned about for quite some time.
Yes, and I would suppose that this number of 12% is a bit of a mixture. On the one hand, it is quite a lot stronger than the 7.5% growth of consumer spending. So to that extent, one must be grateful that at least on a quarterly basis, we had a reversal of what I think has been a very debilitating longer-term trend of more being consumed than what is being invested in the economy. But a lot of the uptick in investment took place in the transport industry, which had been very depressed previously. In terms of machinery and equipment, the increase was actually only marginal at about 3%. There was also a reasonable amount of new residential and non-residential building that took place. But investment in machinery was still very, very weak.
What needs to happen for us to turn things around from a contraction of 7% in 2020 to a half-decent positive growth number in 2021?
So, Kina, there is undoubtedly going to be a half-decent number for 2021, purely based on statistical factors. The second quarter was so awful last year under lockdowns level 5 and 4 that anything resembling current levels of economic activity will show up as growing very rapidly from the second quarter of 2020. So for that reason alone, we are bound to see economic growth of 3% or more this year. But in order for the momentum to carry forward, one has to start seeing government implementing some of the structural reforms that are absolutely critical to get going, to start freeing up the electricity grid and bringing on independent power producers, to start introducing broadband spectrum, and also to be seen to be investing substantially in infrastructural projects, for which we have apparently got plans in place now. But we need to see action in that regard, and then we will see a much better growth rate in 2021. But we will undoubtedly see a positive growth rate unless there is a dreadful third wave and fourth wave of infection that hits us again later in the year. But one is greatly encouraged at the moment from the latest infection numbers, which are virtually at their lowest levels since the outbreak, the COVID crisis first erupted.
In terms of structural reforms, we know that, you touched on the whole issue of spectrum, you touched on electricity. Electricity looks hopeful because we've heard the government and the DMRE come out with, asking the private sector to come forward with bids and so on and so forth. But on the spectrum side, that still doesn't look like it's going to happen. We're just 2 weeks away from the end of March, and it was within the first quarter that was supposed to be released. Then on the other hand as well, we have the Economic Reconstruction and Recovery Plan that was announced to the nation in October. Are you confident that we're actually going to see some, implementation of that piece of paper, or do you worry that it's just a piece of paper for now?
Certainly on the spectrum side, there are some major legal issues, and I was listening to on your sister radio program this morning an interview which suggested that this thing may be dragged out for another 18 months. But more generally, I think the government has come to terms with the fact that implementation is sadly lacking and is trying to working towards addressing that. On the other side, it is receiving a lot of distraction from political machinations within the ruling party that are preventing full-blooded attempts at implementation. So I think what we will probably end up with is a mishmash of some implementation and disappointment in other areas. But there'll be sufficient to ensure that we have some positive growth this year.
One issue that's been looked at right now, and just this is a fiscal issue really, is Cabinet is meeting around what support can be given to, to prospective students who are going to university this year for 2021. There isn't a budget. There's a budget shortfall. What do you think needs to happen in that regard? You've always emphasized how important education is, and if students are deserving, what do you think government should be doing to deal with that particular issue?
This is a huge challenge, and it's a case of actually assisting the universities as well to help the students. And unfortunately, the only way out at this stage is to grant the students more money. And that will involve additional borrowing. But I think it is for a worthy cause. And to that extent, I think, it's not a case of wastage of money. This simply shows how much the huge problem that we've encountered over the past decade, where hundreds of billions have been wasted in corruption, and now where we're trying to fund a worthy cause, we are lacking in finance. I think we're just going to have to do it, and I think the order of magnitude of assisting them is palatable in terms of adding a bit of extra money to help them.
Thank you for that, Dr. Azar Jammine. He's the chief economist at Econometrix.